Carbon trading markets in Europe are tanking in the aftermath of those climate change shocks in Copenhagen last week. Now, we partnered with the Financial Times to bring you Lex on Bloomberg so you can get a sneak peek at the FT's flagship column. A day early, Lex Templeman joins me now live from London. Lex, the climate change talks were supposed to stoke trading in carbon permits. What happened?
Yeah, well, Peter Voser, the CEO of Shell, is disappointed. Most countries involved are disappointed, and now it seems the markets are disappointed. Now, the climate change talks in Copenhagen have concluded that, but there's perhaps more uncertainty now than there was at the beginning. Now, as you mentioned, in the weeks before the talks, there was a strong rally on some pretty thick volumes in the price of carbon on the EU's ETS system. It bounced up about 17%, but in the last couple of days, with the outcome becoming a lot more blurred and sort of uncertainty really coming out of any possible agreement, we've lost all of those gains on some of the strongest falls that we've seen this year.
So, Lex, what does that mean for companies involved in this market and the trading itself?
Yeah, well, this is a pretty clear signal from traders and European companies involved in the scheme, such as steel makers and big power generators, that they don't think there's going to be binding cuts to emissions soon. It's not going to have any sort of price-sensitive impact on the cap of emissions that they're allowed to pollute and trade with. And so we're sort of seeing an easing off. And I mean, aside from this mixed news out of Copenhagen, there's a couple of other factors in the market that are sort of pushing and pulling on the price. Firstly is expectations of lower European electricity usage next year. We're seeing a move, especially in countries that can do it, towards natural gas, as well as just standard cuts in coal usage. And this means that the price of carbon could be lowered, giving a cost benefit to companies. On the flip side, the Bloomberg data shows us that actual emissions for 2008 for EU zone countries was about 8% higher than the cap. Now, this means that more permits may need to be produced by countries that have these power generators, and we might see upwards prices. So in the end, it's the uncertainty that's really killing the market.
Lex, thank you very much. That's Lex Templeman talking about climate change and the impact on carbon trading at the FT's Lex desk in Europe.